welcome to the first in this new series that is being brought to you jointly between my organization, Breakthrough Performance Coaching, and Marcia's organization, Prosperity Financial Consulting. This series, entitled Dollars and Cents in the Caribbean, is part of a financial literacy series that has been conceived by our expert in the room, Marcia, who is going to be taking you through these sessions. She has identified that one of her passions is really to develop the knowledge, awareness, and skills in all of us in Barbados and across the region to be able to deal better with our money and to plan our financial futures. So I'll ask you to please put your questions into the chat. And as we go along, Marcia she'll take her break, she will see the question, and she will address the questions. So Marcia, over to you to get started with just telling us a little bit about you and your diverse background, and then over to you to lead us off in our discussion this evening.
Well, thank you very much, Marjorie, and thank you for that welcome, and welcome to all of you that have joined us. It is excellent, and it's great to see so many faces. Well, I don't see the faces, but I see so many persons have joined. Yeah. I just want to introduce myself. My name is Marcia Cyrus. I am the CEO of Prosperity Financial Consultants, Inc. We are a financial planning company offering a range of services, including financial planning and bookkeeping, etc. Anything financial, wealth management, investing. That's our specialty here. I just want to give you a little background on myself. Way back when I joined London Life Insurance Company. That was an offshore company that is one of the largest offshore insurance companies in Canada, and they had a branch here in Barbados. And I joined that company in their investment department. But just before I get to that, let me just say that my interest in investment and financial management and so was piqued when I went to KFIL, University of the West Indies, KFIL. And there was a gentleman, a lecturer by the name of Balkaran. I don't remember his first name, so forgive me if anyone knows him and probably knows his title better than I do. But he started to talk about the financial markets, and I was really very interested. I said, this is something that I would love to do. But I said, I'm in Barbados. How would I ever get the opportunity to trade and that sort of stuff? And so I basically put it out of my thoughts until a colleague who went to school with me, he worked at London Life, and he had introduced me, and I went to a tour and so on. And subsequently he left, and I managed to get a job there. I could not believe it. So that's where I started my investment career. We used Bloomberg to manage our investments. We were managing at that time corporate clients, international corporate clients, and wealth management clients as well. And so it was really an exciting period, and we got the opportunity to work with a large entity that was subsequently taken over by Warren Buffett, which was quite interesting again. From there, I worked with Bank of Montreal and their Treasury Department, and subsequently Royal Bank of Canada as well. And that's where I really cut my teeth on the regional side. I got the opportunity to not only manage clients who were here in Barbados, but also clients who were also in Cayman and Bahamas, because Barbados was a manufacturing arm for RBC for investments and so on. So, and we got the opportunity to meet quite a few of the clients here. A lot of them are captive insurance clients, and captive insurance is really a vehicle for self-insurance for some type of risks that the company is having. And so we got, we had to present at the board meetings and that sort of stuff. And subsequently, I worked with CIBC in their corporate, we were mostly doing transactional banking on the corporate side, but we also did a lot of wealth management and international mortgages. So that's just a little background on myself. But what I should say is that I was always very keen and interested in education as well. So I do teach a bit. And I realized from interacting with many of my colleagues and friends and so on, I realized that there were so many individuals who didn't have a lot of basic knowledge that I thought was really important to have. And in 2018, I started a financial literacy camp. I started talking to quite a few individuals. One of the things I realized is that, a lot of the adults, figured they knew it all, so they weren't too bothered. I said, you know what, one of the best ways to, shape and start to have a new vision is to probably start with the children. So we had some financial literacy camps, and the children were really excited. We did a lot of touring and so on, and got an opportunity to learn quite a bit about investing and budgeting and planning and so on. So at this point, I'm going to start to share my screen so I can start the official presentation. And my theme really is why we need to change. And you will see as I go through why I am making these comments. And the question then for all of you, most of you, would be, why are we doing this? And as I said, as I alluded to a short while ago, there are a large number of people who are failing to achieve their financial goals, and their significant financial difficulties. And having worked in the bank at a level where we had, we were also managing domestic mortgages as well at some point, I saw the distress. I saw how there are persons who've been paying for their mortgage for the last 10 years, and then it came to a situation where they just could not afford to pay anymore for different reasons. And to be quite honest, in my analysis, some of it had to do with mismanagement and lack of knowledge and so on. So it really, and this is all related to some of the stress that some of us are experiencing, and it could lead to some of what we know very well in NCDs that are so prevalent here in Barbados. And it's probably one of the leading causes of divorce as well on the island. So there's a lot of risk of default and a loss. And I should say at this point that unfortunately, we don't have a lot of studies on these matters here in Barbados and the wider Caribbean. But I was looking at some information for the US, and for the US alone, they lost $415 billion because of defaults and so on in 2020 alone. So it is a significant cost to the economy. So it's something that we really need to address, the fact that we are not managing our monies as best as we can. And of course, some of those defaults then can lead to a dependence on social welfare. And when we reach retirement, either insufficient or no retirement savings. And I know that there's I've been hearing it on the call-in programs and in conversations with other people. There are so many Caribbean people are eager to acquire wealth, but how can you acquire wealth if your basics are not in place? You need to start looking at the fundamentals and getting that in order before we start to acquire wealth. And another pointer then also is the increasingly complex decisions that you're going to be forced to make. I mean, our parents and their parents probably it was very, very simple. You had a house and you built it until it was complete. But in these situations now, you have, in this kind of environment, especially where everything is digital, there are a lot more decisions that we all have to make. And our children, who are the millennials and so on, they're also going to be forced into making a lot more decisions than we did. So it's very important to actually have those basics in place. So some of the topics we'd like to explore in the series over whatever period of time that this continues, we're going to be looking at, we're going to try to cover some financial psychology. So why is it that we do, we spend the way we do, and how can we curb those negative spending habits that are stopping us from achieving our goals? Then we look at budgeting. I mean, we hear a lot about budgeting over and over and over again, but it is absolutely critical that we understand the principles of budgeting and why we need to do it and how we need to do it consistently. right? And there's some easy ways, believe it or not, to do it that will allow us to achieve our goals. Account management, this has to do with the bank and what accounts you have. And it is amazing to me, as a person who worked in the bank and who was a financial person, how many persons don't know what type of account they have. And what I mean by that is not that you have a checking or savings, but what type of checking, what kind of savings, because there's some minimum deposit amounts that you must have for some of these accounts. And believe it or not, some persons are not adhering to that, and they're facing all the charges and all the costs of doing that. And then credit profile, we want to look at the credit profile. Unfortunately, there isn't a real true credit bureau in Barbados, but I know the central bank is looking at creating a framework for that. And but you know, just be sure that when you apply to any of the banking institutions, they do have some type of profile, because they all exchange information and so on. There are other ways that they do gather information, but I'd say that you have to be very careful, because sometimes you don't know why you've been turned down for a loan, but there's some adverse information, like you've been paying your light and power bill late for the last 3 months, and you didn't realize that was going to affect what you're doing, what your profile looks like. So and the truth is, this is a real cost to you, because the worse your profile is, the more you pay for your interests, right? So you will hear a friend will say, well, I'm only paying 3% or 2% or whatever, and you're wondering why you were paying 5%, but you also have to understand that. So those are some of the topics we're going to cover. Loan and debt management, having, as I said, worked in this area for so many years, and having done some private work as well for one of the financial institutions. Since my days at the bank ended, I have seen a situation where there are persons that are perennially going back to restructure debt. And it's really a very difficult situation. So the institution I work for, they asked me to do some counseling with these persons, because they were individuals who were coming back every year to have their loans restructured. We also like to look at risk management and insurance, and then evaluating your current retirement situation, because unless you plan and put certain measures in place, it's going to be very difficult to achieve the type of lifestyle that you're looking for come retirement. And trust me, it comes a lot faster than you think. So what is financial planning? And this is I will deal with some of this here today, but obviously this whole presentation is really focused on, a general, more or less generally giving you an introduction to some of the areas that I think of concern, but I like to really, as we go along these sessions, go into a lot more depth. So there are 3 areas that I'm going to mention here. And the first one is to examine where you are today. What are your personal finances? What's your net worth? These are very important to document, not only to have it in your head somewhere, but to actually document that information. And a simple spreadsheet. You don't have to do anything real fancy or get a program at this stage, but actually really just document what you have, what you own, and then all what you owe as well, right? Because there's this misnomer along the way that if I have a house, that house is yours, and until you've paid the bank for it, it really is not yours, and you really should be putting it on the liability side, as well as you put the value of the house on the asset side, but you also put the remaining debt on the liability side as well. It might seem pretty simple to some people, but it's amazing how many people make that mistake and say, man, I got a house valued at $200,000, but they really owe $100,000 to the bank, and they haven't taken that into consideration. And then the question is, we are here at point 0 today. Where do you want to go? And a lot of this has to do with determining what kind of lifestyle you want to live. So do you want like condo living? Do you like a townhouse living? Do you want a standalone house? Do you want an apartment? What type of, because you may want to travel quite a bit and may not be at home a lot. So you got to determine what your goals are. next year, your next 5 years, your next 10 years, and you should really put some numbers behind those goals. And creating the plan you get from that today into tomorrow. And obviously you put along the action steps to reach those goals. The action steps are very, very important because they kind of trigger your actions for the next step. Okay, so I have a couple of small, short questions to ask, and I'm going to talk about the answers to these at the end. So if you don't mind, jot down your answer as we go along. The first question is, suppose you had $100 in a savings account and the interest rate was 2% per year. After 5 years, how much do you think you would have in the account if you left the money to grow? More than $102? Exactly 102? Less than 102? Or either you do not know or you refuse to answer. And what I should preface this by saying is that a study was carried out in the US to answer these 3 simple questions. And it was amazing. The results were really disappointing, I suppose, for the interviewers or the persons who were studying this information. Less than a third answered these questions right. So it really pointed to the level of financial literacy that existed there. So give you 1 more second to pick your answer, A, B, C, D, or E. And then question 2. Imagine that the interest rate on your savings account was 1% per year and inflation was 2% per year. After 1 year, how much would you be able to buy with the money in this account? So your interest on your savings account is 1% per year and inflation was 2% per year. After 1 year, how much would you be able to buy with the money in this account? So would you be able to buy more than today? Exactly the same? Less than today, or either you do not know or you want to refuse to answer? I hope I'm going to get a better result than that was done on the US side, right? And I just want to say that the low level of financial literacy in Barbados is not unique to us in Barbados or to the region. It's amazing, as I read a number of studies, and it is increasingly concerning around the world, the number of persons who are financially illiterate. And as I said, because of the digitization and the more complex types of payment systems and so on that are going to come into place in the next couple of years or are already here, we are going to need to be a lot more savvy to be able to manage our finances a lot better. And this is the last question. Please tell me whether this statement is true or false. Buying a single company stock usually provides a safer return than a stock mutual fund. Buying a single company stock usually provides a safer return than a stock mutual fund. Is that true or false? Don't bother with the other, do not know or refuse to answer. Which one, is it true or it's false? So jot down your answers, and at the end I'll see, I don't know if you can I don't know if Marjorie, if there's a way you can gather the responses to those questions for me so we can get an idea of how many people answered in, which category, which selection. I don't know if that.
Well, we can ask people to go ahead and just put them in the chat now. We'll start to get an indication all like no.
Okay.
So just go ahead and type your answers in the chat.
Great, thank you. So those 3 questions really will tell us a lot about the group that we have here. I know you all are a smart group, but I know that sometimes the answers may not be as obvious as you might think. So there are a couple of things that I think that we all need to know, and this affects our management of our accounts and so on at the banks. Now in Barbados, we have approximately 43 financial institutions, right? 5 of them, believe it or not, are commercial banks, and about 33 are credit unions. And I think the others are all like finance companies, mortgage companies, etc. And it is it is important that you shop around and you look around and see what services and what products are being offered by those various institutions, because those can make a lot of difference to you in terms of even the fees that you pay to the banks and so on. So there is a withholding tax of 15%, which is applied to bank accounts. And this withholding tax is a government tax, and it was recently increased from 12.5%. So that's something that you need to be aware of. The other thing is that as far as your deposits at the bank are concerned, there's something called the Barbados Depository Insurance Company. That company is responsible for managing the insurance associated with your deposits, so that you will get back a maximum of $25,000 per depositor or category of depositor per institution. So by that, I mean that if you have a checking account and you have a saving account, you will probably have 50,000, if an institution, this is assuming that an institution fails, or there's some kind of banking failure. This is what will be guaranteed back to you, about $25,000 per depositor or category of depositor per institution, okay? Just to be aware and understand how you're managing your risk. So the fund that they manage is valued at about $61 million. And they are responsible, as I said, for ensuring the estimated, it's about $10 billion in deposits that we have with the commercial banks at the moment. And this is significant because of this 10 billion, about 93% is held at the commercial banks, and the others are the non-banks, which would be credit unions and the other Part 3 institutions and so on. As I said before, there really is no true credit bureau, but there is an informal system which exists where banks and other institutions interact with each other, and they also collect information on individuals and entities so that they can risk manage those entities or individuals. But as I said, the central bank has announced that it will be creating a framework to have a true credit bureau, so that you hear about in US about your credit rating and so on, but there isn't anything that official in Barbados. It's more informal system at this point. And I gather that in Jamaica there is one, and in some of the other Caribbean islands they may have some semblance of it, but I think in the Caribbean we probably need to start looking at having a true credit bureau. And bank fees are pervasive. I don't know how many of you realize how many fees you pay per year. You might be paying a couple $100. If you go to the teller, you're going to pay a lot more than if you take your monies off the ATM. And if you stand in orders, I can give you an example of a situation with a standing order where in one case, one bank was charging $22 to make a standing order monthly. Another bank, believe it or not, was charging 10 cents. So these are some of the things that you need to be aware, because a dollar saved is a dollar earned. And if you're paying away a lot of these charges to the bank, then you're not maximizing your earnings. Okay.
All right. Before you change slides,
Sure.
sorry, we have 2 questions coming in. One
Sure.
person's asking what is withholding tax, and we have someone else asking what are insurable accounts.
Okay, withholding tax is a government tax that is applied to the interest earned on your account. So at the bank, you have your account, and there you are, I will talk about that a little bit later, but you're earning 0.01% at this current time. I mean, the minimum savings rate used to be 2.5%, and that was, I think that changed in 2015, I believe. And so if you earn $10, then 15% of that $10 goes to the government, right? So that's 15% of whatever interest you earn on that bank account. Insurable accounts are the deposits that are held at the bank. They are insured by the Barbados Depository Insurance Company I mentioned a little bit earlier. And so that for every account that you own, you will be insured up to a maximum of $25,000. So in the event, as I said, there's a bank failure, then that's the maximum that you will be returned to you. Okay.
Okay, and a little more, another slightly longer question being asked. Are you guaranteed 100% of a deposit up to $25,000, or is it only a percentage that is guaranteed?
Right, you're guaranteed a maximum of 25,000. So if you had $2,500, that's what you'll get back. But if you had 100,000, I'm sorry, but you're only going to get back 25,000, right? So that's how the system works. In the US, I think it's about $250,000 maximum that you will be returned per depositor per institution. I interact with a number of individuals who were referred to me for counseling because they were returning to the institution for what they called a debt restructuring. And in some cases, this was the fourth, fifth, sometimes sixth time that they've come back. And this is not a mortgage, or this is were usually consumer loans. And one of the common things I found for those individuals and why they were finding themselves in some desperate situations. And these persons are individuals who were calling the institution and breaking down in tears, begging. I mean, it was really sad. And I sat with a number of them, and it was really a little distressing, to be honest, and very hurtful. And even myself, I try to help who I could in those times. But one of the things that I found, there were a couple of common things. One was that a lot of them were trying to be helpful to everyone, and they were not saying no. So we had this lady in particular. She had about 3 children, and she was, whenever they ran into some type of crisis, which was usually involve money, they would come to her and she would be helping them, but she wasn't telling them that she was borrowing this money. So she had come to a point in time where she had loans at almost every institution here in Barbados. And don't ask me how it happened. There weren't large amounts, but there were small amounts. But given her salary, it really had become a burden on her. And I had to advise her. I said, please stop helping your children out of these problems. Tell them no, I can't do it. And she called me back about 3 months later and told me she found that was very helpful. So somebody came and said, oh, I needed this. And she said, no, I'm sorry, I can't help you. So she said she was starting, because she was able to get the approval, because they had to have the debt restructured in order to get the approval for the loan. They had to attend the counseling, I'm sorry, in order to get the debt restructured. So she was able to get the debt restructured, and she was paying a much lower amount, even though it was going to go past her retirement age. But she didn't mind, because she said at least she had other smaller jobs that she could do and make the payments. But suffice to say that trying to be helpful to everybody and not saying no is a big issue. Accessing debt when desperate at any cost. There are what US call payday loan lenders, I should say, in Barbados. There are some, I call them loan sharks, but quite a few of these persons as well were desperate when they needed to borrow the funds and did not realize that they were paying as much as 25% in interest rate for these loans, I'm sorry. So the thing is that they were just concerned about getting access to the funds without looking at all the conditions and so on, and found themselves at the end of the day not being able to service the debt. The other thing is, another common thing I saw was several of these persons did not know the size of the debt that they had and the interest rate that was associated with it. So what I saw was a situation where at the outset I would say, so tell me what loans you have, what's the interest rate, and so on. And I would get like maybe 3. And subsequently, in continuing the discussion, realize that these people, in some cases, I remember this one lady, she had 8 different loans with different institutions, 8. And I was asking her, how did you not mention that to me before? She said, oh, I forgot about that. So sometimes they try to forget that they have these debts until the bailiff starts to call them, and then they realize this isn't going to go away. So that's why they're coming back to restructure. So, and getting debt for non-productive reasons, just didn't like furniture anymore, just want to get them out and stuff like that. and family disputes. There are a lot of family disputes that led to them actually going to get a loan as well.